Anytime Adobe reports quarterly results, it seems like shares fall off a cliff. In this most recent quarter, it seemed like nothing changed, as shares were down nearly 14% the day after reporting Q1 results. In this video, we'll go over their Q1 numbers. We'll also take a look at guidance. More importantly though, I'll make the case for why I see Adobe shares reaching $565 a share over the next 12 months. That's about 50% upside, and it's all linked to the valuation. We'll talk about the valuation as it relates to Adobe pretty extensively. We'll take a look at some comments made by management as it relates to AI and the monetization of AI efforts. We'll jump into the conference call a little bit. Of course, we'll take a look at the financials. And then when we get to the technicals, you want to stick around for this one because technically the chart can't look uglier, and we'll highlight some levels where it might make sense to step into shares of Adobe if you're not in this one already. Hey guys, hope you're doing well out there. Like I said at the top, I can make the case for Adobe shares rising nearly 50% over the next 12 months from these levels of $377 a share, and it all relates to the valuation. But over the past 1 year, shares are down nearly 35%. Even over the past 6 months, you've seen shares decline nearly 30%. So guys, keep in mind, anytime you see shares declining so rapidly for such a well-known company, well, the sentiment follows the stock price. Remember that sentiment always follows the stock price, whether you're looking at Palantir or Meta or Tesla, or in this case, Adobe. If shares are falling off a cliff, well then sentiment and the news stories along these stocks will tend to reflect that and generally be pretty negative. Anytime a stock is flying high, well, you'll see that sentiment shift rather quickly. And so keep that in mind and always put the sentiment to the side when you're trying to objectively analyze a stock. It works both on the way up when shares are skyrocketing, but also as shares fall off a cliff. Now, Adobe is one of the names I mentioned in one of my 5 quality stocks to buy for 2025 and also in 2025 as well. Again, these are long-term calls, a couple years out, so they're not picks that are meant to 2x or 3x immediately in the near term, but they are names I am bullish on over the next 3 to 5 years. Adobe, of course, is one of them, and in this video we'll talk extensively about why that is. Now, Q1 results came out. Those were relatively in line and relatively good, as top line numbers came in at $5.71 billion. That was good for 10.2% growth year over year, again coming in line with analyst expectations. The non-GAAP earnings came in with a slight beat of 11 cents. Now, this company does have a pretty good outlook, not just on the upcoming quarter, but also on the full fiscal year. But in terms of Q2 outlook, they're guiding for about $5.8 billion on the midpoint on the revenue side. Considering the fact that now Seeking Alpha here has that updated, that's really where the revenue estimate lies, at the midpoint on Wall Street as well. That would be about 9.3% growth year over year. As you look ahead, this company is expected to do high single digits growth, at least on the revenue side. On the earnings side, expecting to grow a little bit faster in the low double digits, considering the fact this company is also aggressively repurchasing shares over basically the last 12 months, also anticipated over the next couple of quarters as well. In terms of their 2 main segments, they have digital media, which is, think of their creative cloud. So you think of Lightroom, Photoshop, Illustrator as well, and that is their largest segment of the business, the cloud segment. That makes up roughly $4.3 billion in the upcoming quarter. And then you have digital experience, which you can think more of analytics, marketing campaigns. Of course, their Gen AI studio falls in the digital experience bucket. That is a smaller business unit, although it is growing faster at roughly $1.44 billion expected on the midpoint in the upcoming quarter. Again, that would be quarter over quarter, slight growth rates as well, but also year over year, you're anticipating about high single digits to maybe low double digit growth on the top line in those segments. Now, again, I wanted to talk about the valuation pretty extensively in this video. So from an earnings perspective, well, in fact, we'll take a look at the valuation in a number of ways. But firstly, I just want to point out, on a forward earnings basis, this company is trading about 21 and a half times 2025 estimated earnings. Again, that's not a lot for a company that generally trades around a 25, maybe as high as 30 times an earnings multiple. When you look out 2 years, you're trading about 19 times an earnings estimate, and that continues to decline over the next few years, call it next 5 years, in line as the earnings are expected to grow in that double-digit range through 2028. So that's one thing to note, is the earnings continue to grow and the price to earnings subsequently continues to decline. And for a quality company like this, like we'll see, the margins remain relatively strong, at least at the current time. This company also is relatively predictable, considering they have a fair amount of recurring revenue and remaining performance obligations, similar to how Salesforce, ServiceNow, and other enterprise SaaS names also have remaining performance obligations. And so you have a high margin, predictable, and growing SaaS business trading at about 22 times this year's earnings and 19 times 2026 earnings that generally likes to trade around 25 to 30 times an earnings multiple. So look, if the sentiment comes back in shares of Adobe, well, I think from an earnings perspective, you can see your multiple go from 20 times to 30 times relatively quickly. Again, that's part of the bullish reason why you can see a 50% move higher in shares of Adobe over the next 12 months. Now, looking at it from a price to sales perspective, you see a similar trend right now, trading about 9 times a trailing 12 month on a price to sales. When you take a look at the last 10 years for Adobe, this company trades, or at least likes to trade, maybe around 14 times, maybe as high as 16 times a price to sales, and generally trades somewhere in that mid-teens. Again, right now you're at around 9 times a trailing 12-month price to sales. If you just get back to the mean, you're looking at 50% upside in shares of Adobe. Similar story on a cash flow perspective. Right now you're at about 20 times a trailing price to cash flow perspective for a company that likes to hover around the 30 times price to cash flow, again, historically over the last 10 years. Well, just to get back to that mean for Adobe is about 50% upside. So however you want to slice it, whether you want to take a look at sales, cash flows, or earnings, in order to get back to just the mean for this company over the past, well, that would be 50% upside. That would take you to about $565 on shares of Adobe. So that should tell you that if just the sentiment comes back in this name, and of course the sentiment is tied to how this company is monetizing AI, the competitive landscape in this field, whether or not they'll be disrupted. Of course, we'll talk about that in just a second, but if Adobe just continues to execute the way they have and the sentiment returns in the stock, well, you do have multiple expansion upside baked into the stock, at least at the current time. This company can expand the multiple. It certainly has the room to, and that can lead you to 50% upside. Again, that doesn't even include if this company continues, or in fact, if this company begins to accelerate their earnings growth, well, then there you have even more upside, considering the fact that that is fundamental upside rather than valuation upside. Along with that, another thing to remember is the valuation and the fundamentals of a stock can get disconnected in the short term, like in my opinion, you're seeing with Adobe right now. But in the long term, over 5 years, 10 years, the fundamentals and the valuation tend to follow in step. If the fundamentals are declining and deteriorating, well, the valuation should as well. And if the fundamentals continue to improve, well, the valuation should at least stay steady, if not continue to increase. And so this decline in valuation that we've seen with shares of Adobe in the most recent couple of quarters, well, there's nothing, in my opinion, related to the fundamentals. And we'll take a look at the financials and fundamentals in just a second. But in my opinion, this decline in valuation is simply due to the perception and sentiment as it relates to Adobe's future rather than the fundamentals. And so again, the 50% upside that I see with shares of Adobe from their current levels simply relates to the valuation getting back to the mean that you've seen over the past 10 years. Again, wouldn't really take too much for this company to get back to those levels. I think you need a sentiment shift, and I think you need Adobe to continue to execute at least the way they have been. Now, you see stories like this where Estee Lauder companies partners with Adobe to scale digital marketing using their Gen AI tool, Firefly. This is, in my opinion, just one example of Adobe having that enterprise reach that a lot of other companies don't have. Certainly, you have a lot of competition in this space. Look, I'm not denying that the space Adobe is in is very competitive. You have OpenAI's Sora, which is a highly competitive Gen AI model in the space. You also have other companies like Canva and Figma competing in this space. But what I like to repeatedly point out with those other competitors is they don't have the enterprise reach that Adobe currently has. And Adobe's press release itself will tell you the list of enterprise names that they signed in this most recent quarter for one of their products. And in my opinion, enterprises will continue to use Adobe's products, at least if they remain competitive to the other options out there on the market, let alone actually be better than the other options. Now, one of those reasons why I think enterprises continue to use Adobe's products is, first of all, of course, they're used to Adobe's products, something they've been using for 5 years, 10 years. It's hard to make that switch, but also the commercially safe aspect of Adobe's product portfolio, which they mentioned on the conference call. Now, one sort of data point or key point we got from the transcript was the fact that this company provided the AI monetization efforts in terms of a dollar amount. In fact, they said they exited the quarter, that's the most recent Q1, with over $125 million in annual recurring revenue, book of business, and that relates to just their AI standalone applications, which I believe they have 4 of at this point. So again, this doesn't even include the AI they're infusing within their Creative Cloud suite. It just is talking about the AI standalone products that this company has been rolling out more recently. And again, $125 million of annual recurring revenue, that's what they recognized in the most recent quarter. And to put some growth rates for that specifically in perspective, well, they were asked about that on the conference call, and they see the $125 million annual recurring revenue doubling over the next 9 months. And so that should tell you the growth rates this company is seeing, basically over 100% over the next 12 months. That should tell you the scale of these businesses and the momentum that's baked into these businesses. And they also said that is just the starting point from where they can monetize their AI efforts. And they also talked about the different ways that AI, at least infusing AI into their core product portfolio, is creating a lot of utilization for their existing Creative Cloud suite. They also mentioned that Firefly, they now have imaging, vector design, video, and voice. And there's been questions about how important the commercial safety of those models are. Well, they're seeing that the commercial safety is super important, and a lot of enterprises are turning to them not just for the quality, but also for the commercially safe aspect, which again, not a lot of other models out there can provide. And so all in all, do I think Adobe's AI monetization efforts were relatively slow? Do I think their AI rollout was relatively slow? Yes, absolutely. I think that's what gave competitors like OpenAI, like Canva, like Figma a lot of time to catch up and produce some really, really compelling products. But I also think this is a growing TAM where you have more and more, not just freelancers, but creators, as well as the enterprises that continue to push their marketing budgets more towards AI. And with that growing TAM, I think Adobe may not have the same dominance that it had with the Creative Cloud, but they can certainly have a compelling product and continue to have reach and grow alongside the growing TAM as well. So from all the data points that management is providing, the fact that they have a $125 million annual recurring AI standalone business that's set to more than double over the next 9 months. They're also telling us the TAM for the digital marketing and advertising space continues to grow, and they're growing alongside with it. And they're not lowering any guidance or any future expectations because of that increased competition. I think all of those reasons tell you that this company is simply just executing in a highly competitive field, but they are executing well enough to stay competitive and continue to retain and grow their customer base as they innovate on these AI tools within their own product portfolio. So those are some things and some signs that tell me that Adobe is at least able to come along and ride the AI wave, and they're not getting left behind because of it. I think it's been long enough where if this company was really losing ground on AI video generation or image generation or text to image models, well, that would have been reflected in sort of their remaining performance obligations, or at least growth rates would have meaningfully slowed down. Considering the fact that those both continue to remain strong, I think that should tell you this company is doing just fine. Now, they also have an investor meeting coming up on Tuesday, March 18th, where they will release some new innovations. So be sure to have an eye out for that. Now, in terms of the financial performance, I mean, it's business as usual over at this company. Scrolling up all the way to the income statement, we'll kick things off with that. You had last year revenues of $5.18 billion. That grew about 10%, like we saw, up to $5.7 billion. On top of that, you are still seeing margin expansion over this company. Last year, your gross profit off of $5.18 billion of revenue was nearly $4.6 billion. This year, on about $500 million higher in top line revenue, well, pretty much all of that flows down to your gross profit, which also increased $500 million up to $5.1 billion. So basically, every dollar you get on your top line flows all the way down to your gross profit line. Again, nearly 90% gross margins for this SaaS business. Tells you one of the high quality reasons for why I see room for multiple expansion over at Adobe from 20 times up to 30 times an earnings multiple. Again, 9 times sales up to 14 times sales as well. But again, look, that isn't the full story. You do have operating expenses. Last year in the same quarter, you recognize that acquisition termination fee of that Figma deal falling through of about $1 billion. So your operating expenses last year look significantly higher, but again, if you strip out that one-time expense, relatively growing in line, about $300 million is what you added to your operating expenses side. You continue to grow your R&D as certainly the space gets more competitive. You're also growing your sales and marketing as, again, you have more competitors out there. So you have to put out your product, especially as you're rolling out new AI products in your portfolio. So all things being considered, if you again strip out that one-time acquisition termination fee, your operating income basically went from 1.9 billion, call it up to 2.16 billion. So you added about 200 to 300 million on your operating income side over the last year. That's again telling you that business continues to remain as expected over at Adobe. This is really what they've done over the past 10 years, and well, nothing is changing, at least at the current time. From a balance sheet perspective, not a great balance sheet, certainly when you take a look at other big tech names, but you still have more cash and cash equivalents, as that is sitting at about $6.7 billion. It did decline on a quarter-over-quarter basis. When we get to the cash flows, we'll see just how they're using that cash equivalents. In terms of debt, they wiped out their short-term debt of about $1.5 billion. In terms of long-term debt, that increased from 4.1, call it up to $6.1 billion. So they paid about 1.5 billion on the short-term side, but they took on about $2 billion in terms of long-term debt. Should really tell you maybe they paid that off immediately and then borrowed it back at possibly a lower interest rate. And now from a cash flow perspective, you have basically $2.5 billion of operating cash flows. That's on a quarterly basis. So look, even if you annualize this out, you get to close to $10 billion of operating cash flows for a full year. For a company about $190 billion in market cap, it's about a 5% free cash flow yield. We took a look at the price to cash flow multiple. It's come down to 20 times. So from a cash flow perspective, this company is looking very attractive as well. Again, tells you that the valuation certainly has room to expand. Also from a cash flow perspective, and this company isn't spending a ton on CapEx. In fact, your CapEx was basically negligible for the most recent quarter. So you have about $2.5 billion of free cash flow, well, that this company is putting towards a massive buyback. That came in at $3.25 billion in the most recent quarter. It did accelerate from same time last year, where you had about $2 billion in share buyback. And then in terms of the debt, we saw they paid about 1.5 billion on the short-term side, but they borrowed about 2 billion on the long-term side. So I think this company's focus right now, at least considering the fact that shares are declining rapidly, is a focus on buying back the stock. Over the last 12 months, they've bought back about $11 billion. They were asked about the share buyback, and well, management just said they'll continue to be opportunistic anytime they see big declines. I'm guessing Adobe will come in here, pick up shares on this decline as they continue to have enough cash flows to execute on a well-defined buyback. So I think all things considered, look, the financials basically tell you the story is intact over this company. When you listen to the conference call and the bullishness of management, well, they tell you that the AI monetization is certainly coming. Maybe it's a bit slower than anticipated, but they are also taking care of the commercially safe aspect of those AI models that maybe other companies, other startups aren't really paying all that much importance to. And then I think the biggest piece with Adobe right now is the valuation has come down. Again, I think that's largely due to the sentiment rather than the fundamentals. And speaking of fundamentals and technicals, the chart over at Adobe looks really ugly. You've been in a well-defined downtrend of lower highs and lower lows. You've broken through the bottom end of that and you continue to head lower. I mean, this right here is pretty much a falling knife. So even though I am bullish on shares of Adobe, when I see price action like this, I'm not eager to jump in and buy the dip on shares of Adobe because you have so much selling, so much weakness. You also don't have a meaningful level of support until really where you are right now at 370, and then lower your levels of support are underneath $330 a share. You also, when you have maybe not such a clear and well-defined area of support and resistance, what you could do is throw on a fixed range volume profile here on TradingView, and that should tell you where demand for shares begin to pick up. Well, you have a lot of volume up here in the 400s and low 500s, and then below that you have demand as it extends into the low 300s. So if you can come down into the low 300s, that's a point where maybe shares of Adobe can find some footing. From a technical perspective, again, if you're picking up shares, you're buying a falling knife here. And so I would unfortunately wait for a sign of reversal with shares of Adobe. You want to confirm that this downtrend is over, and the way you confirm that is by posting a higher low. In fact, we'll go back to the 2022 downtrend to give you a fine example, because look, you could have bought the dip along the way on this stock in 2022, and well, it would have continued to just go lower. The way you confirmed that this downtrend was over was you made your first set of higher low right here at $322. That told you that basically this downtrend was over, and now Adobe shares were making a new uptrend. And look, whether you picked it up in the 320s, you didn't get it right at the bottom. But again, the point of these technical charts is not to time the bottom or pick it up right at the bottom. You want to identify levels of support and resistance. That should tell you where demand for shares are from a buying and selling perspective. Again, just tells you and helps you make the decision for an entry and exit price, along with telling you how momentum is in shares. So again, use technicals to support your fundamental thesis, whether you're bullish or bearish on the stock. Don't let it be the only reason why you buy or sell a stock. Just use it to help you identify areas where shares could see demand as they continue to head lower. In my opinion, that level of demand would be here in the low 330s. That was my take on shares of Adobe, one that has been falling for a while. But despite the competitive landscape, the fundamental story remains intact with this name. And if you can separate the sentiment and news as it surrounds Adobe from the fundamentals, well, I think you have an opportunity with this name. Again, 50% upside just from the valuation getting back to the mean. Let me know your thoughts on this one in the comment section below, whether you're bullish or even bearish. I would love to hear your take in the comments. As always, thanks so much for listening, and I'll catch you guys in the next video.